Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the last week of February, as you can see, starting from 24th of February 2025. I will try to keep these videos as informative and small as possible because I need to make so much of videos, and also I have to backtest more, right? So I can't make a very long video because it takes a lot of time. And yeah, these videos are just for reference what I've done and just to look back at what I've done. So we'll try to keep it small, like under 10 minutes. So let's see. So before starting the weekly breakdown, let's show you the news. On Monday there was no news, Tuesday no news, Wednesday no news. President Trump speaks. I don't consider those as news because those are not at our timing, at our trading timing. So Monday, Tuesday, Wednesday no news. Thursday there is New York news, and Friday there is Euro and New York news. So every day, I mean, no day is like we can't trade London session because we are backtesting GBP USD, so no problem, right? The fact that I'm backtesting GBP USD, it's like I'm also backtesting Euro USD because they move very similar. So now, according to how this weekly candle closed, the bias going on to the next week will be bullish, but not one of the cleanest because of, you can see, the previous candle was a very bullish candle, so I anticipated this candle to be a bullish candle, but this candle is not looking like one of the cleanest bullish candle because once the price was here, right, there was a weak rejection here, meaning the price went up, the buyers were dominant, and then the sellers came in the market and then gave a wick to the upside, which is clearly looking like a bullish candle, but also not one of the cleanest, if it makes sense. So now going on DXY, according to how this weekly candle closed, my bias on DXY was bearish. It was not one of the cleanest also, but it was still bearish. So I considered, by aligning GBP USD and Euro USD and GU, I came to a final decision that my weekly bias is bullish. So yeah, that is when I went to the daily time frame to look for trades. Now according to the daily bias, I trade according to the daily bias. So Monday there was no news, my bias going into the week was bullish. So on Monday I didn't do the trade because Monday the weekly and the daily bias were not aligning on Monday. So whenever the weekly and the daily bias are not aligning on Mondays, that is when I decide not to trade. So now going on Tuesday, my bias is clearly bearish on GU and bullish on DXY according to how these candles are closing. And on DXY there was a fair value gap right here. I'm targeting this fair value gap if my bias is bullish, and on GU I'm targeting some sort of liquidity right here from Thursday. As you can see, if I go to the 4 hourly, it will be more clean. So on the 4 hour we can clearly see the price is now in this bullish demand zone. As you can see, I have not marked it, but I can see it. This demand zone is valid due to this break of structure or change of character right here, and then now the price is in this bullish solidified range. And yeah, mate. So now going on Tuesday, I was looking for a sell. Tuesday I didn't do the trade because the setup never appeared. I was looking for a sell from this H1 supply zone, not one of the cleanest supply zone. As you can see, this was a New York session. Already the supply zones that are already mitigated are not one of the strongest supply zones because I want to take a trade from a zone which is not mitigated, meaning the price never entered that zone, right? So those are the zones I want to trade from. So Tuesday was a no trade day for me. So by showing it, it is no use of showing it to you guys because I didn't do the trade on Tuesday, and also on Wednesday I didn't do a trade. So I will just cut it off because it's just waste of time. So now going on Wednesday, my bias was bullish. I didn't do the trade. I will show you why I didn't do the trade, but obviously no problem. So now going on DXY, my bias for Wednesday was clearly bearish, but according this Wednesday candle is looking like a bullish candle on DXY, not one of the cleanest, but it's looking like a bullish candle, right? So now going on the 4 hourly, clearly we can see I was looking for a buy opportunity. So on 4 hourly there is nothing clear. The previous week high is already swept. The draw of liquidity for the week being the previous weekly high has already been swept, right? So going on Wednesday I was looking for a buy. So on Wednesday I got a trade on EU rather than GU. EU, we can see the Asian low liquidity got swept, as you can see right here, and then we got a move on the London session, the reversal. Whereas on GU the Asian low never got swept, and then our London session was literally consolidating, which I've also written here. These are the callouts, as you can see. You can pause it and read if you want. These are very important callouts, and yeah, these callouts I will not read it one by one because it will take a lot of time. I have already screenshotted it, so no problem. I didn't trade Wednesday because the London session was consolidating and we didn't got a setup. So now going on Thursday, my bias changed from bullish to bearish now because of how this candle closed. The market went up and then gave us a weak rejection, and whenever there is a weak rejection from a supply zone in the higher time frame, it is clearly showing that the sellers are now entering the market, and we can see a potential sell-off from that zone, and vice versa for DXY. DXY was clearly looking like a bullish candle, and the pair that confirmed the bias for me was EU. EU was clearly bearish, as you can see. So by looking at all of that, I was looking for a sell opportunity on Thursday. Thursday there was USD unemployment claims news, as I've shown it to you guys. So on Thursday I was looking for a sell, but Thursday was a very low probability day to trade because there was no clear zones to trade from. As you can see, the price is in this bullish solidified range. The price is in this bullish solidified range on the H1 time frame, right? So yes, the bias may be bearish on the higher time frames, but on the lower time frames it is not catch up to the higher time frames as of now, because the H1 is still in the bullish solidified range. I decided to take the trade from this H1 supply zone, which I took it on the M5 time frame. Let me quickly show you. This trade was the worst trade of my backtesting, meaning this trade is, I make trades, people make trades to see what they should do, right? Even me, I do that, but in this case I journaled this trade to let me know that which trades not to take. For example, in this example, this trade was literally the worst trade to be taken, because first of all, the higher time frame was not one of the cleanest. There was no point of interest to trade from. My bias was bearish, and the price was in a bullish solidified range, as you can see. And the London session also didn't give us the move early on, and the change of character happened after the time window. This zone that I've marked on London session with the heading called London, I have marked this zone because in this timing, this is when most of the traders are present in the market, and there is huge amount of volatility in the market. So also the Asian high didn't got swept. So this trade was the worst trade, meaning there is A class setups and there are C setups, right? This trade was a C setup. Shouldn't have taken this, and I can guarantee you for a fact in the live market I wouldn't have taken this, and this trade was obviously a losing trade. And even if this trade was a winning trade, I would have considered this as a loss, because my strategy, my checklist, my rules, anything, nothing was aligning in this trade. So the trade may be a winner, but if the rules are not followed, I just don't take the trade, because in the long term what's gonna help me is following my rules, following my trading plan, and so on and so forth. Not taking a win for one day. That's not gonna make me a profitable trader for the long term. I wanna be in this game for a long term, right? I wanna make this my career. So obviously I can't take trades like that, not following my trading plan. So now going on Friday, my bias is clearly bearish according to how this Thursday candle closed. So Thursday also, I shouldn't have traded on Thursday because the bias was also changing from bullish to bearish, and also the weekly profiling thing. We know that if a bearish candle is forming on the weekly time frame, the price first tends to go up and then tends to go down, and then so on and so forth. And this is the bearish weekly profiling. So on Friday I was looking for a sell opportunity. Let me quickly show you the candle, and also on DXY the bias was clearly bullish according to how the candle closed. That fair value gap I was targeting, which got filled to the T. And on Friday also I took a trade. Let me show you how, when, why. So on the 4 hourly we can clearly see the change of character happened, and on the 4 hourly there's nothing much to show. But on the hourly we can clearly see this trade was a very weird trade, because I took this trade against the bias, meaning my bias was clearly bearish on Friday. But even though my bias is bearish, we can take trades if the lower time frame entry model, the rejection, everything is there. We can take trades against the bias. Like my bias was clearly bearish on Friday, but I was looking for a buy, because I was not looking for a buy but the price literally gave me a buy. To look for a sell, what I would have done, I would have waited for an Asian high to get swept and then my entry model to appear. But in this case, the same sort of thing, I would have looked for a sell opportunity. We got it for a buy. Even though the price is not, the trade is not aligning with the higher time frames. Like in this case, my bias was clearly bearish, but we got a buy opportunity, right? So we can take trades like this as long as the lower time frames or everything else is aligning. So this trade was not a bad trade. This was a B setup. I gave it a B setup because it was against the higher time frame. Otherwise it would have been a good trade. As you can see, we got our 1:3. As long as we are winning, that's fine. And trades, we are not always going to get the perfect setup in the markets, right? So we have to adapt to the markets. So this trade was literally adaptable, and the M5 entry could have been better, but also not one of the worst. Lower highs, lower lows. After the Asian low liquidity got swept, and this is when I wait for the change of character, right? The change of character happened, not one of the best. I want the change of character to happen as impulsively as it can. Like in this example, the change of character happened slowly, making its way higher highs and higher lows, higher highs and higher lows. But even though I took this trade at the equilibrium, this trade was picture perfect. After entering me, literally the price literally went to the upside, right? So this strategy literally is working, and the equilibrium entry is also very good. As you can see, in the long term, it's working. So this was the weekly breakdown for you guys, and the weekly profiling also got followed to the T. As you can see, the Monday, Tuesday, Wednesday went up, Thursday, Friday went down, and a quick pullback at the end of the week. So these were the weekly profiling, guys. Hope you guys learned something from this video. These videos are purely based on real life experiences through putting blood, sweat and tears, bro. Genuinely, this is my time. So hope you guys have learned something. See you guys on the next video.